Yo, what is good? What is good? Let us begin our overall breakdown for the final day of the week. Hope everybody's doing well. I've had a pretty interesting day for gold. A lot of stuff happened, but again, kind of still in the same place. But we'll get to the analysis soon enough, and then we'll see what we can take for tomorrow, last day of the week. Obviously, last day of the week. Then the weekly is gonna close next week. The monthly is gonna close, so we're gonna have. Hopefully, we'll see some decent pushes mid next week, or maybe even sooner than that. Who knows? Who knows? Yeah, welcome back, guys. Can you guys hear me? Guessing you should be able to. Can you hear me? I think you can. Do you have any plans? Probably just chill out, do some EvolutionDVS work. That's about it. Nothing too special. What do you guys have planned for the weekend? I guess it's also it depends, right? If you guys are like full-time traders, or if you guys have a job, or if you do some other thing, right? Completely depends. Because if I have a job, then the weekend for me is like more of a relaxing thing. Because I mean, after work, I probably have like a couple hours, I would say, to do other work, and then dinner, and then stream, right? So my Sunday to Thursday essentially is kind of like full work days, and then weekends is kind of when I've actually got time to relax a little bit more. But for if you like, for example, if you're a full time trader, then you've got loads of time, right? Because let's say you catch one position in the morning, that's it. You can do whatever you want. Cool, cool, cool. Do we have news tomorrow? We have news today. We don't. Oh, we do. We have core PCE price index, and then two yellow folders: personal income and personal spending, which I don't think will. Oh, we also have a pending home sales, orange folder at 3. Okay, okay, okay. I see. I see, I see. Alright, let's get that. Get the charts up. This is why everyone's here, right? For an analysis. An analysis. Wow, would you look at that? What the hell is gold doing? Very interesting though. Sup, Eddie? How you doing? This is the last stream of the week, guys. So tomorrow is obviously the last trading day of this week, Friday. So we won't be back Friday evening because there is no actual trading on Saturday, right? But understanding that we will be back on Sunday for Psychology Sunday, and then obviously for next week as well. So don't think that, oh yeah, we have to get a position tomorrow if you didn't get positions today, or if you did, that the market still owe you something for tomorrow, right? Nah, just chill out. You can always come back on Monday, whether you took a loss, break even, win, right, or whatever it was. Just make sure you have an account to trade for the next day. That's the most important thing. Because the worst feeling, right, if you rank all of them, the worst feeling is blowing that account and not having an account or needing to deposit more money to trade again. That is the worst feeling. And then I would say after that, the next worst feeling is probably if you went against some of your own trading rules. Like for example, if you let's say over leveraged, right, or you over risked or whatever, right? So yeah, just make sure you don't put yourself into like a kind of overall bad psychology when it comes to any of these things, because if you do, it makes it slightly more difficult for you to continue trading. You might fall back into those old habits, but that's why we have Psychology Sunday, right? That's Psychology Sunday is a time for us to kind of discuss our inner feelings about trading, and yeah. But yeah, welcome back, guys. Got 12 people in here. I'm just gonna wait a little bit longer. There also may be a chance that the entire 5-day kind of stream that is kind of complimentary from EvolutionDVS may shorten to 4 days potentially, and I might take one of those days just to do some other DVS related work to grow some other parts of DVS. But I'll let you guys know if that happens. Likely, I think maybe it's gonna be like a Thursday or something, but oh, AB Mike, you're back. Welcome back. Welcome back. Yeah, I think it's beneficial to at least just slow down for the day. You're about to kind of just chill out, rest, but understanding what actually happened for the day and comparing that to what our analysis was earlier on yesterday, and also looking forward into what could happen tomorrow. It's just, I think it's good in terms of education, right? Learning about what price could do. And I think it's good also, we don't have too many people, which means that I can actually answer each and every one of your questions, right? If not, if we have way too many comments or whatever, then it's I also have to go through the Zoom, which have priority obviously, and then I get towards you guys, and you guys may have a lot of questions, and I try to stay as long as I can, but again, it's also relatively late for me, so I can only do what I can do. Bear, welcome back, Mohammed. Do I smoke upon the devil's lettuce? I mean, I did with Wix and Don when we were in Miami. That shit knocked me the fuck out, though. And then Wix kind of offered to drive me home. I was like, yeah, fair enough. I was pretty high, and then I just headed home. I got some Popeyes, and then I was knocked out for a good hour. Yeah, I mean, it's just you have to, right? When you meet Wix for the first time, you kind of have to. I mean, that's also kind of why I went to Miami, right? To meet Wix and to meet Don. So it'd be silly not to. And for anyone who's kind of coming to London to meet Don and Wix and the rest of the DVS crew as well, make sure you get what you want out of it, right? If it's just relating to trading, then that's fine as well. But we're also a community. Besides trading, we're also human, right? So Cool. We're going to be starting very shortly here. Yeah, welcome back, guys. Last day of the week of streams. I feel like the stream quality has improved as well, just in terms of like the content. I feel like when we first started, I don't know, Tom or like Jacob, I don't know if you guys like notice it, but I feel like initially our breakdown was like, you know, very much based off of like, oh yeah, I'm just gonna find a place to mirror, and then exactly like look for those levels and like on the dot. They would play out, right? Don't get me wrong, it was still good analysis, but over time, I feel like more adaptation needed to happen, right? It's like, yeah, like that thing could happen, but if it doesn't happen, then what do we look for? Yeah, I think it's changed quite a lot as well. I think also these sessions make me reflect as like a trader myself, right? Like, what am I doing that needs improvement? What am I doing that could be improved, or you know, needs changing because I'm doing wrong or whatever? Are you a full-time trader, or have you got I have a job. So today's thumbnail was that 9 to 5 job, and that is me. I have that job. I think having a job is goated, man. Because you take the stress off trading completely. Taking a loss is like not even taking a loss. Because it's like, at the end of the day, cool, I lost that money, but it's like, I've already deposited that amount into that account or whatever, right? So if I've lost the entire account, that's still a sunk cost, that's fine. Because that money is in there regardless of, like, I can't do anything about it, right? Unless I do withdrawals later on. But overall, I still have like a second income stream. Like, I'm not depending on trading to be an income at the moment. Exactly, yeah. Yeah, I think a lot more detail. I think it's like previously, right? Like if we were to do yesterday's analysis or whatever, we just look at one thing. I would say the main thing we look at is, oh cool, we have a daily closure below this range. Yeah, let's look at last time daily close below. Where did we tap, right? Like these areas. Yeah, cool, right? But it's like so many things can happen leading to the drive or not the drive, right? In this case, we haven't got the drive yet, and we can kind of have a deeper dive into what actually happened. But I think previously, like a couple months ago, our analysis was just every single time frame look for the mirror, and if we can't find it, then it's like, oh, it's a little bit more difficult today. But I think once we kind of nailed down like wick entries or like nailed down kind of liquidity as a concept, I think it's quite powerful. Also, I think of this as more just like a journey which I'm sharing with you guys. Like, I'll tell you bad positions that I take. I'll tell you positions that I take which I'm like, this probably wasn't the best idea, stuff like that, right? Like today I took I think 2 pretty bad positions, and then some which are relatively okay positions as well. And it's like, yeah, that's fine. Because I don't have the pressure of, you know, I have to make money from this, and it's just a learning curve for me. As it is for everybody else that's here as well. Like, we're all learning, right? So there's good, there's bad, obviously. Cool, guys. I'm probably going to get started here. So, yeah, we're 16 minutes past 10. I'm a little bit late. 2 minutes late on the analysis starting, but let's go to the monthly. So the monthly is closing relatively soon. So tomorrow's Friday. Then we have 3 more trading days until the monthly closure. And it looks like your monthly's not going to flip, right? You do have FOMC, I think Don mentioned, on the 31st of January. But it's like, you know, if price does that, if it flips last minute, then you're worrying, right? Because how hard is it going to flip, right? If it flips, is that just, you know, more liquidity for us to continue driving down? Like, that's what I'm slightly more worried about. But overall, kind of monthly is still, I would say, just these 2 lines. Ooh, let me change my lines. Yellow is easier to see. So around these sorts of areas, right? So we're still in the range. Nothing has happened, right? The monthly candle is still within its range. We haven't tapped into 991. Same analysis as the entire of January, right? We're expecting price to come down towards 1992, 1991 at some point, right? And why? Because that's just the bottom of the range. So you want to confirm that this is the bottom of your range before you're able to drive back up, right? Because technically, when we look at price action, it does this, right? Just taps those levels to continue going up. So if that's what we're expecting, then we need price to tap into these areas before it does anything, especially because we got a closure but not above 2071 or 2073 or 5 or whatever that is, right? The top of that range. So overall, we still have some range to drive down, I would say. How can we continue that bearish bias, right? That on the monthly candle is very difficult to analyze, so we're gonna have to jump towards the weekly. But overall, because we're not expecting the monthly to flip in time, and we're expecting the monthly to continue driving down to tap into those monthly levels, then we can be looking at how we can continue our bearish momentum on the weekly time frame as well. So monthly, I'm more bearish now, right? Weekly, we're kind of still hovering around these areas. We have kind of overall level around here, I would say. Most recently, your weekly tapped, right? You have a bottom of range around here, right? And you haven't filled the entire range yet down to 2002. So you still have range to fill, right? You've come back up after creating, I think, a lower low for today, tapping around 2008, 2009, right? Which is fantastic, right? It's confirming that, okay, there's a high chance we want to continue filling the weekly wick to the left and filling the range towards 2002, right? So this, pull back up to these areas could be price just creating a lower high to continue down. But at the same time, we have to think about, okay, can the weekly flip? And now I'm going to put this line here, right? So at 2016, your previous weekly closed respecting 2016. Does that mean that in this week, right, once we grab some liquidity, potentially we can flip and continue back up, right? So those were the things we were thinking about for this week, but unfortunately, it is already Friday tomorrow. So if this candle were to flip and close bullish, there's probably very little we can do in terms of buys towards the top of the range, right? Obviously, that can happen if price does flip, right? If price starts doing something like this, where you get, something that looks like this and it starts pushing up, cool. We understand that we have, once we get a breakout above here, probably some range to drive up towards 2073. But it's Friday, right? And if you're expecting the weekly candle to continue pushing for next week, what are you gonna need? You're gonna need a top wick, right? So if the candle closes like this, that's really bad for us because it means that the weekly has no range to continue going up, and it's just a 50-50 of if it's going to come up first or if it's going to come down first. And if it's come down, right, you don't even know if that's going to continue flipping to continue back up because there's no range to continue filling up. But overall, regardless of what happens, we're expecting price to completely fill this bottom of the range because, first of all, you're bearish, right? You're bearish, but you're also you're re-breaking some of the weekly lows to continue down. And also, regardless of where you want to go, if it's up or down, you need liquidity, right? So if you're going down, then cool, we'll tap in 2002. If you want to go up, you're also going to need to tap into some areas for liquidity, which may be below here, right? So regardless of those situations, it looks like there's a high chance that price is going to come down towards those areas. So I'm pretty bearish on the weekly as well. Even though it is a Friday, I'm understanding that we want that bottom wick for the weekly, and there's a high chance the weekly candle will leave a bottom wick. But we have room to drive, I would say. So let's look at the daily. Daily, it's interesting. It's interesting. So we have a level firstly at 2005, I would say, which we closed previously exactly on the dot, right? And now we kind of had a breakout below 2016, I would say maybe around 2018 sorts of areas. I think looking left, it is slightly lower at around 2016, right? So is this now a fake out to come back up? Let's do our analysis, right? I would say overall, unlikely it is, because overall for the daily and the weekly, we're coming down. So we have a bearish bias, right? And also you've closed bullish, but respecting most recent. So if I put a line here, right, you'll see that we've actually closed bullish, but respecting the most recent range. Any given point, this could be a celery for us to continue down, right? Obviously, it shows that because we didn't push towards 2005 for today's candle, it means that we don't have that liquidity yet. So that top wick for the daily towards around 2024, it wasn't enough. It wasn't enough for us to continue driving down. If I extend this line over, right, let's see if we can find anything, right? You can see this. Cool, we have a kind of respecting candle here. Next candle came back up towards 2031 to grab liquidity before you're able to drive down, right? So in terms of the daily range, I'm understanding that you may need to tap back into somewhere around 2031 before you're able to see that drive down to fill to 2006, 2005, okay? So if that's the case, right, understanding that, okay, price needs more liquidity to continue driving down, then we can, for tomorrow, probably say that we're slightly more bullish, right? Because if we need the liquidity, it's going to exist above this daily candle, right? And in that case, we can potentially look for some buys to continue towards 2031 because it's a pretty big range, right? Even though it might be the the daily top wick for us to flip bearish later on, but it's still a 100 pip range. So there is a way we can trade that. But overall, right, our weekly, our monthly is bearish. I'm understanding that we have closed respecting any given point. We could just reject to come straight down, right? And in that case, cool, we'll look to take those sells down. But again, we do need some liquidity. So on the daily, it's looking like liquidity level around 2031. And 2005 is still a level I'm expecting price to tap eventually, right? Even if that is for us to reject to come back up, right? Price will likely grab liquidity to come back up. So that's the daily. Let's go towards our 4 hour. 4 hour is also very interesting. I would say let's try to define our 4 hour level first. Just looking left to see if 2021 is a valid area. It's not too bad. It is not too bad. 2021. Yeah, okay. I'm going to leave it at around 2021. Even though you have no top wick, and we could move it slightly lower. So like around these areas, I would say. Yeah, I would say your overall range is probably below, I would say 20.6. So I'm going to put it around here, which means that you have a 4 hour closure with no top wick that is above my range, right? What does that mean? It means that there is potentially no range for us to continue driving up on the 4 hour. But does that mean the price isn't going to continue pushing up? No, it can, right? It can definitely continue pushing up, right? If we're expecting that daily top wick and liquidity towards 2031, then cool. Yeah, we can look to take buys to continue up. But as it's currently closing on the 4 hour, it's going to be very difficult because we're expecting, regardless of what happens, price to do some sort of retracement to grab liquidity before we can continue pushing up. And likely what we need to see is probably a re-break of some of these lows here. All right, something like this. And then once that, let's say something like that happens. And then after that, what is this going to be? That's going to be our daily low, right? Daily bottom wick. Once we then get closures back above, after that daily bottom wick, cool, we can potentially look to take some buys maybe above here, the previous daily high, right? Towards that 2031 level, right? So if that happens, fantastic, right? And we'll look for bottom wicks maybe towards around these sorts of areas as liquidity in the kind of lower time frames to take us up to 2031. Overall, I am bullish, I would say, for tomorrow, just because of how our daily candle has closed. And also mainly because we don't really have liquidity. I would say I'm more bullish because if we wanted to drive, yesterday our analysis was that we were extremely bearish, right? Extremely bearish to come down, but I just didn't know where the liquidity was. Right, I didn't know how far the top wick needed to be on the daily, and evidently, right, the top wick at 2025 currently is not enough. So if we're expecting more liquidity before we're able to drive, then I'm expecting potential buys towards that kind of level there, right? And I'm looking at the 4 hour at the moment. If we do break the lows, probably not down at 2008, but like somewhere around these areas, you could still have a very high chance of flipping on the daily to continue going up, because to fill down to 2006 or then break below, you need that liquidity to drive down towards your monthly bottom of the range, which is around 1991, 1992, right? So all the things are everything's kind of coming together now, I would say. So let's have a think. How can we get buys and how can we get sells? Okay, let's talk about buys first, right? So as it's standing now, your 4 hour and your overall structure is looking a little bit weird, right? Because you had this pretty aggressive push down yesterday after we took a loss, right? Obviously, we started consolidating, and every time we consolidate, what we look for liquidity, right? So we grab the liquidity outside of this range first, which means, and we didn't fill in 2006, right? So we grab this liquidity, which means that we have enough liquidity to start pushing up. And this, I would say, is potentially that kind of 1 hour or 4 hour liquidity to grab that potential daily liquidity, or maybe this is like a 30-minute liquidity grab for that hourly and 4 hour liquidity here. But you would think, right, after getting this and a closure back into range. Obviously we got a range fill, which is fine, right? But what we didn't get was the continuation down towards 2006. So it shows that potentially this is not enough liquidity for us, right? And it means that kind of aligns to our daily that we need more liquidity above, which is why we identified the kind of 2031 level before we're able to come down. So the overall way that price would look is still coming down from these areas, right? We consolidated around here, grab liquidity here to come up, right? And then now once we get this re-break of the lows, then cool, we can get that. But we're understanding that if this wasn't enough liquidity, what could be happening is this, right? We're consolidating here, got a breakout, wasn't enough liquidity. Maybe we need to do something like this to come up. And then once we do, cool, we'll look for that liquidity, maybe something that looks like this to continue down, right? And why have I drawn these extra bits? Because price isn't just going to come down in one push, right? We did here, right? But then we stopped, right? So in order for us to get that steeper push again, we're going to need these pretty high liquidity points before we're able to do this. And if it doesn't do that, expect it to maybe start trickling down a little bit more. Or maybe you'll get pushes, but like less aggressive pushes overall. But once you do break this low at 2008, 2009, I would say, you have a pretty nice range fill towards 2006, I would say. Because you're breaking this low, you're breaking these no bottom wick areas. So once you do come down towards that area, yeah, you should be pretty clean towards 2006 at least. But the only issue is if the daily has no top wick and you just start pushing down first, which I think will be very unlikely given how the daily is closed, then in that case it'll be difficult for us to get those sells. But yeah, how the daily close clearly indicates that we should get a pretty nice top wick, even if it's the residual momentum from this candle, right? So if this candle continues to push up first, that's fine. We can look for something that looks like this, where let's say it has like some form of bottom wick like that, and then as price is kind of closing, respecting certain levels, let's say like back below here or something, right? So you get a closure back below, something that looks like this, and then you get like a liquidity grab, then cool, we can look to take those sells to continue down. And that would be a pretty nice position, right? Because you can either get in off the break of these lows, or if you really want to wait, right, you can wait for more closures below, let's say like here, right? And then you can look for some top wicks for us to continue down. And then even if you didn't get any of those positions because you had no bottom wicks or whatever, you can probably look to take the sell stop below 2009 to fill 2006. So there's a lot of different ways we can get into those sells. I realized we talked about sells and not buys. Okay, let's talk about buys. So if price does something like this where we come down, oh, I think we did talk about buys. Yeah, but I would need it to break some lows. Probably not like all the way down to here, because I'm expecting once you break this low, high chance, it means that this could be enough liquidity for us to continue driving down. But if you don't break that low and you start retesting the highs, I'll probably also need some pretty steep top wicks. So if you do something like this, right, I'll need, firstly, probably a closure above here on the 4, right? So if you get something like this, but like with a steep bottom wick, I would say, like at least down to 2016. And this here, this is what, 2024, right? So that's pretty steep bottom wick, right? But I'm expecting this, right? This potentially as well. Like somewhere within this area, I would need a bottom wick, 2018, 2016. But yeah, so that would be for me to confirm that the daily doesn't want to flip to head back down, right? Because at any given point, I'm understanding that the weekly is bearish, the monthly is bearish, daily yesterday was really bearish, and today we didn't get that range fill towards 2006 that we were expecting, right? So at any given point, daily could still flip to come down, and this could be our liquidity grab. But if we come down to break the lows or break some lows, tap into these areas and then reflip and then close above, or then re-break, let's say this wick was like this, re-break this high, then yeah, cool, we should probably see a nice clean traffic move, right? That looks something like this to continue up, right? Because you have pretty clean traffic to the left, because that was a nice push, right? And this range it's not a small range, right? This to there, 47, you have some potential runners towards, I would say, like this level here. So depends on where the closure is, maybe 65, 70 pips maybe, approximately, I would say. So yeah, pretty clean. So unfortunately the sells hasn't happened yet. I was looking at some pretty dank sells, to be fair. On the 4 hour, 4 hour after all of this, this candle closed below, right, back below after a pretty steep top wick breaking all the highs. I was expecting this 4 hour to flip and drive to fill this wick at least, or fill this wick, right, the previous 4 hour, but you didn't, right? You started rejecting to come back up, which is fine. Price can do whatever it wants, right? But it just means our analysis will need to change a little bit and adapt to what price is currently doing. It's just a little bit unexpected after we had, I would say, this fake out here, and then you had this fake out here, right? This, after you respect this range, came back up, faked out to come down, but then you just continue to push back up. So a lot of stuff, a lot of fake outs happened. Like I would say 3 fake outs happened today. You had this, and then you had this. 3 fake out day. Basically it. I think that's essentially the analysis. I think what were we looking for in terms of liquidity yesterday? I think it was like 2023, between like 2020 and 2023, right? Like anywhere within like this box. I think that was our like 2021, 2023. So where did you come up towards? Like 2025. So you're top of the range, yeah, approximately like this area here, 2020, like approximately that range, right? But yeah, if we're expecting higher time frame liquidity, that's what we're expecting. Yeah, 80 Mike, I think so. I think, yeah, I just didn't know where the top wick needed to be, right? I was expecting it to be at least here, so you broke through, which is perfectly fine. That's why, like at the top of these ranges, I started looking for sells early, just because of trying to look for those overall smaller confirmations to drive price down. But I think what kind of influenced it was you actually grabbed quite a few orders here, for news, right? You pushed down and then rejected to come up. So your push down wasn't as aggressive, I would say. If this didn't happen and then you pushed up first and then closed back to the range, we could have probably taken the sells down to fill the range first and then also potential runners to 2006. But because this happened, it means that a lot of the volume that's been kind of in this range here was already used. This liquidity was used for us to push up, right? Instead of us using that kind of area as sell orders to come down. But yeah, it's all good. It's all good. It means that now we have some pretty clean range to come down here, though, right? So that is always an advantage that we can make use of later on. But yeah. Right, let's see what the Zoom boys have to say. Yo, what's up?
What's up?
Hello. How you guys doing? Doing good?
Yeah, good. Good. You?
Yeah, a little bit tired.
Work on?
Just towards the end of the week.
Yeah.
How much sleep do you get a night during the week?
6.5, I would say.
Yeah, that's brilliant.
Yeah, I mean, if I have like a meeting in the morning, then yeah, probably like around 6. If I don't, I usually sneak in like another half hour of sleep. But I tend to work later during the day anyways, so kind of makes up for it anyways. Okay, what was my position today? I took a position.
What was that the sell position?
Oh,
I assume it's on that bullish, that 15 candle there, right?
I took a couple. I took one more after that, and I think I got stopped out for that one. So I took this. Which one was it? Like here, somewhere like here, and I was like, oh yeah, there's a range fill down to here, which it tapped, but I was like, there was so much range to drive down because I was so bearish for the day, right? Yeah. I was like, I was probably gonna wait for a re-break of this low before going break even, but then it came down to here, and had no bottom wick. I was like, okay, thank you God, and then I had to close here. Well, that's exactly. I mean, that was the plan, right? If you have no bottom wick,
Yeah.
Yeah, that's the only thing that I took. But then also after this closure back into this range, I think the hourly also was printing quite nicely. Like at that point, your hourly came up to all the way up to here, then started flipping bearish. I was like, yeah, there's a high chance that price, regardless of what it's going to do, it's going to probably fill down towards the bottom of this range, towards around here, 2016, which is where that kind of wick fill is. And as that's happening, I'll probably, because you broke the highs, right? Then you flipped, um, and then broke some of the 5 lows. I was like, yeah, there's a chance you're gonna come down. So I took a pineapple around here, and I closed one at 10, which was the first position. And the second position I closed also at around 10 here. So both were okay, but I took 2 bad positions today. Where was the first one? The first one was a sell around here, I think. So I took a sell here, and I put my stop loss like here. Oh wait, no. I took a sell here on the 4-hour open. Yeah, took a sell here,
Oh yeah.
and then I put my stop here, thinking that like your 4 hours continually respecting this area. Your 15, everything I think at that point was respecting this top of the range here. Everything was like that, and you also had like a pretty nice rejection wick here. So I thought like, let's attempt a smaller stop loss, because I was also worried about once you cleared this range, you'd have pretty clean traffic to continue up. So I put it there, and I got stopped, but then it came all the way back down. So that was the first one, but it was like a 40-50 pipper, so that was okay. And then the other bad position, and this is a bad position, you guys should not do this, is this. Take a sell here as it's breaking these lows.
Really?
But it was fine. I had chances to come out break even because I had a pineapple. My stop was like here. I had a pineapple. I had a level literally marked up like on the top of this wick here, but I didn't get in there. I got it like got a pineapple somewhere around here. I had many chances to exit, like at break even, net break even for both. But I was like, again, so much range to drive down. I was like, I'll just leave it, and then I got stopped out. After they created this wick, and then it came down, I was like, okay, I'll put it here now, and then I got stopped out here. So yeah, 2 positions, two losses, but yeah. Oops. Yeah.
You go on the 1 hour, you know that candle that we were speaking about the other day, when it has like a really, really tall top wick and then like a barely bottom wick. Towards the low of the range.
This one. This one.
It was the fake out one, yeah, this one.
Yeah.
Just how I know the other day we were speaking about how like massive top wick and barely any bottom wick. You sort of see that they don't drive.
Yeah.
Yeah, I thought it was quite interesting seeing that.
Yeah, it is. It is.
They just didn't. There's no range moving into it.
I've also been noticing like a lot of patterns that look like this on different time frames, where you get like a breakout or like whatever. Let's say you get like a bearish candle that's pretty strong, a strong push, and then you get like a rejection, one that just breaks or kind of is like this equal. I've been seeing this across a lot of different time frames as well. Like for example, that was the hourly, right? Your 15 I think printed one earlier, like around here, right? You had one there. I think on your 5 you had multiple as well, like up here, these sorts of patterns I'm talking about.
Yeah, I think it's in like there's a, I don't know if you like went over the book, but there's this thing called like the candle trend. Don talks about it. It has those patterns in it. It says something like when you see those, they're like low on volume and price is probably gonna reverse. But
yeah,
I haven't really read that book myself fully, but I've seen those patterns. I think if Tom or Johnny know what I'm talking about, then they might be able to.
I've not read that book.
Fair enough. I guess in a book. Yeah, I was just noticing it today, like more prominently. I was like, yeah, this is happening quite a lot, and then I also was looking at like previously what happened in like these areas, and then also I think on the 4 or whatever, like down at like these sorts of areas, like similar patterns just everywhere. But yeah, it's interesting. But I was definitely expecting for price to just drive, which is why I took those pretty aggressive sells to come down, right? But I guess because of this wick, we didn't get that. I would say. If we didn't have this wick, we would have had pretty clean drives once we started re-breaking some of these lows.
Look, I'm gonna send.
I mean, if you're saying that, could you pretty much say the same thing for this 4-hour candle?
For the current 4 hour?
Yeah.
As in like
oh,
this?
Oh, wait, no, on the 30th of the day. Alright, actually.
Like this?
I thought we were on a different... Yeah. Just the opposite of it, respecting the top of the
So
range.
what I would need to see for it to kind of complete that is probably something that looks like this.
Yeah.
Right? And then after that, I'd probably look for like a top wick, and then, like, if I was to even try this position, right? That's what I would be looking for. And then I think probably towards this is your bottom of your range, I would say. Because if you're looking at like the previous versions of it, like if I go to the hourly, right? This has range to go up, which is probably why it's going to continue, I don't know, to where we had a pretty nice fill up to these wicks areas, right? Before you had any sort of rejection here. And then on your like 30, oh sorry, it was on your 15 or whatever. Was it your 30? Yeah, like this, right? It's just a bigger version of it, but it started coming down. This started going up and you filled up to, yeah, I mean, we'll see. And maybe it's even better because you have no top wick. But again, it also makes sense with overall ranges as well, so. But I was expecting like this, after this came down, we respected this area, right? And then you started coming down, you closed bearish again. Cool, I'm understanding you need liquidity, which is fine. So as it came back down to here, I was like, okay, yeah, now you close below, you're probably good to drive, right? You have a pretty steep top wick, your hourly's closing below, I think, at that point. Your hourly closed below, and it just started pumping. So I was like, okay, cool. Probably gonna get stopped out.
Look, if you check the EvolutionDVS chat, I sent the things. They kind of like basically what you're talking about. I feel like. I don't know how accurate that would be.
Wow, there's a book on this? Yeah, of course there's a book on this stuff. Oh, I mean, that's literally what we were looking at a couple days ago as well, right?
That's something I might call the, I was going to call the mountain peak.
Yeah.
Or the mountain.
I mean, that's what we looked at previously, wasn't it?
Evening star pattern.
I didn't even know that was in the book. Jesus.
I have heard of that, to be fair, a long time ago.
Yeah, fair.
Yeah, that's what I was talking
fair
about.
Fair enough. Yeah, signs of no volume. Or it's just like, I need to stop taking positions sometimes when it's like at the end of the day, I'm like, even though I'm expecting a steep push, I wasn't officially like done for the day, but I should be, and when there's no volume.
Yeah, like you said, if your position's there, but you know,
yeah,
you probably shouldn't be taking it. Then you should.
Yeah, the only issue was like I saw because the daily closure was so clean. Like once you do break some of these ranges, I was expecting a very steep push, but I guess we need more liquidity, which is fine. It's more experience for me, which is good.
I started recording myself with like the camera on while I'm trading.
Oh
and
yeah.
then yesterday, like during the loss, like I was on my phone and I looked up and I just like I didn't have any reaction, which was cool. I was like,
yeah.
Right. And then I recorded today, and then same thing, and it's just like I just kind of want to keep on watching those videos, and then like because I'm recording my trading and then recording myself, so I feel like it's good.
Yeah, I think it's good to like see that you actually have no reaction to it now. You've probably gone through so many wins and losses, right? Like it doesn't like of all different magnitudes as well. So it's like it doesn't like there's no need to feel anything. It's just like, yeah, cool. It's just some numbers going up.
Another trade, yeah.
Yeah. What was wrong with the loss position? It seemed accurate. Weekly, daily, 4-hour bearish broke lows. Yeah, I mean, I would say that these positions here, I would take that probably not if it was at the end of the day, because this was like what 5. I think that's the only thing I would say wasn't good about the position. If it was any earlier, I would have taken the exact same position, Mohammed. if it was like a 1:30 p.m. right after news, or like say like 2:30 p.m., which is like I think 9:30 for Don, or like 8:30 for Don. Like if it was that, yeah, I would take that same position. Especially the ones in the middle here as well. But yeah. So.
You tried to tell me to message you, but yeah, I don't know why, but on the entry types or no, the setup types, it doesn't let me add like anything to that, but on everything else it does.
As in like the TBJ you're talking about?
Yeah, like you know how you can add stuff on like on.
So you need to go to the setup page to add setups and entries.
Okay, that's what I was thinking.
So if you go to the setup, are you there?
Literally, yeah.
Yeah. So that's where you add up to 10.
Okay.
And then it'll show up.
Yeah, that thought crossed my mind, and I don't know why I didn't.
Yeah, no, it's alright. It's alright. Yeah, because for some of them we needed to regulate, and not just have like a million different setups and entries.
But the other ones, when you just add them, like right there when you click the little pencil and then you click add rule,
yeah,
that's fine like that.
That's fine. Yeah.
I had a position today that was like so different from what I normally take, but
Yeah.
it made sense to me at the time. So it was a 1 hour sort of /15, and it was like the 3 p.m. candle that closed bearish, but it closed respecting.
This.
So it was the one that had a really big bottom wick, and it closed bullish. You were pretty close to it there, like 3 p.m.
Here. Or this one?
A bit later on, like I guess 4 actually, closed at 4.
Oh, it closed at 4. So this one.
The bullish one.
This one. So 3:30.
Yeah, I wasn't expecting a big drive, but like we spoke about that sort of residual momentum when we're like driving in one direction and we get like a really strong rejection, close respecting a certain range, then you're like expecting some sort of push up before you continue to move.
Yeah.
I was trying to grab that.
Did you catch 10?
I think the max. Yeah, so I got max profit was 10, and then that was my stops break even because it was like a really key level in the lower time frame. And then it just tapped it and then stopped me out break even, which is fine.
Yeah.
But, I thought it was an interesting one because it like drove so far down, pretty much filled the entire range.
Yeah, I did, and then it came back up to respect.
Then closed bullish by some sort of level. So.
Yeah, for sure. I think in those cases you're gonna at least see like because you have another range going up to around like I would say it's here, right? Because you have this way.
Yeah.
So it's a high chance you're gonna fill the next range just to come back down if you want to. And it also shows that you need more liquidity above this wick to continue driving back down, because you had this massive rejection, right? So
yeah.
I would say it's okay. We've occasionally taken some positions like that with Don as well. They're kind of just ones where we close full at 10 more often than not.
Yeah, I think I should have done that. Yeah.
Yeah, like for example, these ones. I think for today, when news came out and then we were just starting to push, we had a buy stop here or something. And then as it broke the highs, we were like, okay, yeah, cool, it's gonna come up. I was extremely bearish for the day. I ended up closing, I think, like at 5, because I closed half at 10 and then it hit my break even after it came up to like 25 or something.
Yeah, pretty much same as me too.
Yeah, I was so bearish today though. If this didn't happen, so good though. But now I know, right? Now, next time I know, because I don't think I've experienced this before. This is new to me. The fact that you have news that pushes you down on a day that you were, in that kind of overall bias, and then you're taking, like, you see trades coming back down to with your bias after creating a steeper top wick. Now I know, like, those trades are still like you need a little bit more confirmation, or you just need to be a little bit more careful because the kind of ranges have been filled already. That's good. It's good stuff.
I just need to get better at like closing half at like decent levels. Because I've looked on my journal and like some of the trades, I'm getting like max profit at like 35.
Yeah.
I'm getting like stopped out at breaking. So I'm like, why not just close at like 30
Yeah, exactly, right? That's why the journal I think is so useful because like for example for my trades I can tell that like oh I'm closing full on average at about 15, but that's like a lot of the times it's like a half closure. So why don't I just close full if my full profit that I'm usually seeing is 19 pips? It's like then I make an extra 50% every single time.
Yeah, I was wondering, like, I always, well, the previous understanding was that like I shouldn't be targeting pips in general. I should be targeting ranges and sort of like range fills. But at the same time, like if you see in your journal, for example, that like majority of your trades hit 15 in your case,
Yeah.
is that like a valid reason to say like, okay, I should be closing at 15?
No, no, I would say the range is still like, I would say at that point you would you would kind of compare like what does 15 pip look like in terms of like a 5 range or like a 15 range. I'd say your typical 5 range is between like 8 and 12 pips. I would say, right, and your 15 range is slightly bigger than that, and you slowly increase, right? But what it probably means that since we're closing like or it taps around, you know, say 15 pips or whatever, right? It probably means that it fills the 5 range, comes up to create that top wick, and then starts rejecting, something like that. So we can still target the whole 5 range, but it means that there's probably not that much else we can capture when we're kind of comparing it like that. But if you're seeing like 30, for example, maybe that's a full fill of like the 15, right, range, something like that. So you just kind of relate it back to like the next time you take a trade that kind of aligns with some of those criteria. You look at what does 15 or like what does 30 pips relate to in terms of your current chart. And that helps you understand like, oh, okay, this it's around the kind of full closure of this range, right? Maybe that's just what I need to do, or maybe that's like what price is likely to print for me.
Yeah, then sometimes also it's like I'm targeting like an hour range or a 30-minute range, and it still will drive like 35 pips, but I won't close because it hasn't filled the range yet, and then it reverses. I'm like, oh, but I got max profit 35, but I didn't close.
Yeah. Exactly, but yeah, we will see over time.
Yeah,
I think like with the new journal, we need so much data. Like even like I was thinking like 1 year's worth of data probably isn't enough for Don, since he only gets like one trade maybe like a day. So if he has like say like max 300, because you don't have weekends and all of that anyways, right? That's not a lot of data.
254 trading days in the year.
Like say he has some pineapples in there, right? So let's say 300, right? He's not. That's not enough data.
Yeah.
But it's okay. We'll still use it. I think overall in the future, anyways.
So up to 300 days still wouldn't be enough data.
No. I think at least like 1,000 plus. I'd say.
Did you hear what I said?
Yeah. You think that like were you asking if 300 days was enough data?
No, I said there's 254 trading days in a year.
Yeah, I heard that.
So
but
that would be.
Yeah.
How many years? 2 years? 3 years?
Thing is like.
Days?
Thing is, if it's like 200 something days, right? Like say 250. Say he has like a pineapple on some days, and say he has like he takes 2 trades.
Oh, in terms of pineapples, okay, I wasn't.
No, because you add up pineapples as separate trades as well. And then you also add like, for example, like say he takes 2 trades in that day because he has like a signal or whatever, right? Then you add that together. Say he has like 300 average, so it'll take him like 3 years, I would say, to get like good data. But by that time, maybe his trading is also going to be different. Maybe we don't have a certain entry type anymore. Maybe we take, like, for example, right now, off the rip, we're just going to take stack sells or something. Like, I don't know. Tomorrow looks like a pretty normal day. Yeah, I mean, you have a closure back into the range, right? But you have no top wick on the 4, your daily... It is closing back bullish. I am expecting a bit of a push. I'm expecting a gap up today, I would say. I don't know how big. Maybe like at least a fill towards around 2022. So that's, say, like 12 pips. Like here to here. Like, yeah, 10, 12 pips. News should... yeah, I think news will... But you also have the weekly close, right? So The weekly would likely will leave us with a kind of top or bottom wick, whatever it is.
I just averaged out
Yeah.
for all the times I've hit break-even stop loss and the number of pips I got on those trades for like this month.
Yeah.
And the average is like just over 15, and what I've got on it is about 5.
Yeah, see, you could have had an extra 10 pips.
Yeah.
For how many trades was that? It should say just to the left of it. Trades taken.
16.
Yeah, so that's an extra 160 pips.
Yeah.
No.
That's why I was like, I looked at Don's initial journal. I was like, cool. I mean, yeah, you're journaling, but it doesn't tell you much.
Yeah, I wasn't adding these drawdown and max pips before.
Yeah, I think it's like once you start actually shoving data in, it gives you quite a lot of analysis that's useful. But again, you just need a lot of time to build up that data, which we have. We have a lot of time.
But MT4 just sucks for measuring that stuff. It doesn't have the measuring tool that works the same, and it doesn't show you where your positions were, which is what I was trading on before the start of this year.
So MT4 or MT5?
MT4.
Yeah.
That's pretty trash.
Yeah. So it's a complete pain to go measure all that stuff.
Yeah, hopefully in the future we'll have a thing which does it automatically for you. It just links up to your MT4, MT5. Because a lot of the stuff, like for example, time of day, date, and all of those things, like you can
that
basically
can be automated in.
Oh yeah, that's all automated, right? What we just need is like an actual intelligent input in terms of like, oh, what time frames aligned, or in terms of like, yeah, like what was the kind of what were you expecting for that trade, stuff like that. But like max pips, max drawdown, you can just calculate that. It's not something you should be doing manually. So if you just link it,
is there anything in the analysis that you can look at? I assume there is somewhere where you can pick on break even, stop loss, hit, and then look at max pips and max
break even, stop loss, hit.
move stop loss. Because that's what I just went through. Like manually, I didn't do it to the analysis page.
So let's have a look.
Because there's the break-evens that play out section, and that's just.
So what were we looking for? Break even, to stop loss to break even.
Like stop. Like in the trade exit reason, have break-even, stop loss, hit, and then average out the.
Wait, so
is there anything in the analysis page that averages the max pips you saw, and then
max pips you saw for the break evens after the break even is moved to stop loss?
Yeah, after stop loss.
So do you have the break evens that play out?
Yeah, I do have that.
Yeah.
Does that calculate the same thing?
So this one, the 19, is how many pips that price gave you, right? How much you closed at 13, how much drawdown, how much average. Max profit was how much you saw. So I saw 16. Max, I've been taking average is 13. So I've been doing pretty well for my stop loss to break evens, right? But price action is printing me 19. So maybe I can get an extra 6 pips or like whatever on an average of 41 trades. I guess you're asking about these 3, or is that something else?
No. I was asking if there's a section for that for the trade where you can use the trade exit reasoning to do the analysis.
Oh, trade exit
reasoning.
reasoning.
So that I'm only using the ones that have break-even, stop loss, hit, because if I put stop loss to break-even, I might have just had TP it or closed it.
Yeah, I haven't put that in. So like using like this section here, right?
Yeah, and then break-even, stop. taking all of those
No, I think there's a...
and putting, because I feel like there's a more important to be looking at than the ones that actually run.
Yeah,
Or you close.
Yeah, maybe we can add an extra bit, like an extra section similar to like these, where we just have like based off of those 2 or 3 criteria or whatever, it gives you that overall. Yeah, but something to add. Oh, you gap down.
Interesting.
That is interesting. That is how many pips that? 10? Yeah.
Man, if I'd been in max lot size, I would have passed my funded. Fuck.
But yeah, let's see. Daily open down, which means that if it flips, you could get a range fill back up. Wick fill, continuation up. Grab that liquidity zone, 2031. Yeah, we'll see, we'll see. If it comes back down, I'm expecting it to tap around 2060 in these areas at least, if it wants to start retracing back up. But again, like, you also kind of have to play around this range as well, right? Because you close respecting the most recent. So I'm going to need a couple more confirmations tomorrow. It's not going to be as aggressive of a trading day for me. Unless price prints some pretty mad liquidity. AB Mike. So I'm trading like multiple accounts. I've got 3 funded accounts. So 1 is funded and 2 is in the evaluation stage. And I'm trading 2 accounts which are live. I've just linked them all on social trader tools. And essentially, I just take 1 trade and it just copies everything over. So it's like trading 1 account, essentially. I just set the lot size as fixed. I don't use variable lot size. It just makes it easier for me to see.
Elvis.
So,
Do you know why my profit and percentage wouldn't be showing?
profit and percentage.
I have the year checked, I have pair checked, and then
Do you have a starting balance?
that I just did right now. Would it have been because of that?
I don't know.
Maybe. I don't know.
I think I might just restart my journal because I thought I was like messing with it probably for like up until like not too long ago. So
Yeah, fair. I mean, you can always just find the latest copy and just re-download it.
yeah.
And just like if you just copy everything over, it's the exact same, so nothing changes. Yeah.
Elvis, what's like the rationale behind like having separate live accounts and then connecting them to having just one big one?
I would say like it's helped me mainly because like if I have multiple accounts, first I think the issue is like how do I trade multiple accounts at, like say I have 4 accounts. Do I need 4 screens to trade all of them, to click buy or sell on each of them, right? Then I have to manage all of them like in terms of closing half or whatever. Then it's just annoying, right? Whereas if I have one, logistically it's easier. Secondly is I think with having different accounts, you may also have different account sizes, which means that you may have to use different risk, right? If you have all of them as separate accounts, for me previously, I'd be like, oh, okay, so like on this account, I'd use this, but you know, like sometimes I can use half risk or like whatever. And it just complicates things quite a lot. And if I'm on my MT5 on my phone and I'm switching from account to account, sometimes the lot size won't change from like a previous position. Say I'm on my funded, right? And then I just suddenly switch to my live. The lot size is going to be different, right? So if I take a trade, maybe it's not the same risk, but I don't notice it. And that's annoying for me. And also, I think in terms of trying to keep it to like 1 trade idea per day, or like, you know, just good trading ideas in terms of setups and entries, I think having everything linked makes it easier because whatever you do, that trade is across the board on your entire portfolio. Whereas like if you are trading some a certain way and some a different way, then it's like, well, how do you pick which one is trading with the serious trades or like the non-serious trades? Unless you have an account which is like zero, like $100 or whatever, right?
Yeah,
But-
yeah, no, I get that bit. I guess I was just more curious as to why you'd have like multiple lives instead of just like one live.
Oh yeah. So one live was literally the $100 account one that I just never bothered moving out. Like I could just deposit that one into my other one, but I was like, I might as well just trade that 0.01 and just see how that goes. And then the other account
Okay, yeah.
is the slightly bigger live.
Do you think there's sort of any sort of, I don't know, does it make sense to sort of have like a smaller account, like you said, like the $100 account, and be trading that like you normally would, but then have it connected to almost a larger account? So from what you're actually seeing in terms of like profit and loss and like risk and the psychology of things, it doesn't seem too bad because it's only $100 account. But
No, because then when you do get
connected.
to that, I would feel like it would be bad
Yeah,
for you.
you just like don't look at the bigger
Because then
account.
you wouldn't, because I don't know, because it's just a number at the end of the day, like, doesn't mean anything.
Yeah,
Turn
It's
the trade.
actually potentially a good idea to just link a bigger account and have the master account as like a $200 account.
Yeah, that's exactly what I'm saying. Yeah.
I think there's one issue around that, which is if you're constantly looking at like a small value, there may come a point in time where, like, say you want to deposit a slightly larger amount of money there, but you aren't seeing the actual value, right? And then once you are trading the account, you're saying like, oh yeah, I'm trading that $200 account, whatever. But in the back of your mind, you know you've linked all those accounts.
Yeah.
You'll be worried, right? And like not being able to see it and like accept it, I would say, is probably the more dangerous thing. The obvious kind of fix here is just to be not kind of emotional around like what the number is, but I see what you mean. Yeah.
I just thought it was funny, to be honest.
Yeah,
Like
yeah.
that one
It's a
account.
good idea, but then, like,
But-
also, too, just look at Don and, like, I feel like that's why he would, like, to get to that level, to take that type of loss like that and be comfortable with it.
Yeah, I guess you gotta go through like losing that amount to there become sort of not numb to it, but then not so emotional for those losses. Because if you don't experience it, then you're never gonna learn from it, I guess.
I mean, at the same time, though, like, I would think, though, like, if you would think of a hedge fund or, like, a bank, I don't know if they're looking at, like, their profit. They're probably looking at the percentage, you would think, right? I
Yeah.
feel like that makes sense.
Yeah. Because it's just the actual amount of profit doesn't, like, you could make like say 2 million or whatever in like one small trade or whatever for the banks or whatever, and that's like what 0.01% or something, and it's like, well, that's just insignificant.
Yeah, exactly.
Yeah. How much do I risk per trade? Around like what 2.5%, I think. On the smaller accounts, like obviously I think I'm risking a slightly more, because the live account I can tailor that to my liking, but like for the fundeds I'm trying to keep it relatively lower. Cool.
Okay, so with the latest update, just be on controller effects, or
With the journal,
yeah, or do you have like an updated one you can send me?
it's the same link, so I just update that same journal. Yeah.
Bet.
Right, guys, I'm probably gonna end it around here. Any last questions before we end the week? I mean, we're always back on Sunday.
Oh yeah, it's Thursday, right?
Yeah, it is Thursday.
Nope.
Cool.
No, not for me.
Oh, Monday.
No, alright. Cheers for joining up this week, guys. I'll see you guys on Sunday, and have a good weekend. Take a break from the charts and relax.
You trading Bitcoin with Jack this weekend?
Are you learning it to be able to stream it, right, Jacob?
Yeah.
Alright, yeah, see you guys.
Cheers, subs. Have a good weekend.
Yeah, have a good weekend, guys. Yeah, YouTube, I'm gonna probably be ending it here as well. It's been a good week. Overall analysis every single day has been pretty strong. right? Obviously, we did take that Don loss today, and I also took a couple losses today, but that doesn't really matter, right? I'm going to be back. I'll do the same thing again tomorrow or Monday or whenever the next trading day is, right? But the key thing is, don't feel FOMO over the weekend, thinking that you have to. Oh, like I'm not making any money over the weekend. Monday, yes, I'm gonna make so much money on Monday, right? Markets don't care. Markets don't give a shit, right? So just come level headed on Monday, clear mind, right? And just trade normally. Go with your plan, go with your setup, your entries, and don't regret anything. That's the main thing. But hopefully you'll have a good weekend. Kind of get refreshed, chill out, relax, and then come back on Monday refreshed. But yeah, have a good weekend, guys, and thanks for joining up this week. It's been a good week, and I'll see you all for Psychology Sunday, which will be again happening 10:30 p.m. London. So yeah, see you all then. Peace.